Welcome to the thrilling world of cryptocurrency. As you embark on your crypto journey, it's crucial to be aware of common pitfalls that many beginners fall into. This video will guide you through some of the most prevalent mistakes in crypto investing, ensuring you navigate this exciting but volatile landscape with confidence. 1. FOMO. Fear of missing out. One of the common blunders folks make in the crypto world is giving into FOMO, which stands for fear of missing out. Picture this: you're scrolling through social media, and everyone seems to be striking it rich with their crypto investments. That feeling of "I need to get in on this" starts creeping in. It's like seeing others having a blast at a party you weren't invited to. In the crypto space, FOMO hits especially hard when you witness people cashing in on a particular coin, and you start second-guessing your choices. But here's the deal: impulsive decisions driven by FOMO often lead to regrettable losses. Instead of rushing in, take a breather. The crypto market is a roller coaster, and trends can switch up in a flash. Do your homework, understand the projects, and make informed choices rather than getting caught up in the FOMO frenzy. 2. Neglecting research. Cryptocurrency projects exhibit significant diversity in terms of technology, use case, and the composition of their teams. A common pitfall is investing without a solid grasp of the fundamentals. It's essential to dedicate time to delve into the project's white paper, get acquainted with the team members, and gauge the strength of the community backing it. Opt for well-informed decisions rather than succumbing to the allure of hype. Disregarding research is akin to navigating the cryptocurrency landscape without a map. While the market's excitement may be tempting, lacking proper research essentially means flying blind. Picture embarking on a road trip without checking your vehicle's fuel, tires, or route. Odds are, you won't get far before encountering unexpected challenges. Similarly, neglecting research in the cryptocurrency realm exposes you to scams, market volatility, and missed opportunities. It's crucial to invest time in comprehending the projects, technology, and trends shaping the crypto space, ensuring a more informed and secure journey toward your financial objectives. 3. Overlooking security. Imagine your cryptocurrency holdings as a fortress in the digital realm. Overlooking security in the crypto world is like leaving the front gate wide open for potential intruders. It's crucial to fortify your defenses by using strong and unique passwords, enabling two-factor authentication, and keeping your private keys under lock and key. 1. Think of it as building a moat around your castle. The deeper and more secure, the better. Regularly updating your software and being cautious of phishing attacks is like adding extra layers of armor to your crypto stronghold. 1. In the fast-paced world of digital assets, staying vigilant and prioritizing security is your best bet to safeguarding your treasures. 4. Ignoring diversification. Sure thing. Ignoring diversification in cryptocurrency is like putting all your eggs in one basket. It's a risky move. Cryptocurrency markets can be quite volatile, and betting solely on a single coin or token exposes you to a higher level of risk. Diversification, in simple terms, means spreading your investments across different cryptocurrencies rather than going all in on just one. It helps to mitigate the impact of poor performance in any single asset, and even if one investment takes a hit, others may balance it out. It's a bit like having a variety of tools in your financial toolbox, providing a more robust strategy for navigating the ups and downs of the crypto world. So, steering clear of diversification is akin to playing a high-stakes game of poker without a safety net, which might sound exciting but is not the best approach for long-term success in the dynamic crypto space. If at any time during this video, you're interested in more information on Bitcoin or cryptocurrency, please click the link in the description. 5. Day trading without experience. Getting into day trading can be tempting, but it's not the smoothest ride, especially for beginners. The crypto market never sleeps, operating 24/7, and prices can swing like a roller coaster. Newcomers often get caught up in frequent trading, which can lead to emotional decisions and financial setbacks. Instead of diving headfirst into day trading, consider a more laid-back approach with a long-term investment strategy. Jumping into crypto day trading without experience is a bit like taking a plunge into a raging river without knowing how to swim. It involves buying and selling cryptocurrencies within a single day to catch short-term price changes. While the potential for quick profits is there, it's crucial to be cautious. Without a solid grasp of market trends, technical analysis, and risk management, you might find yourself in over your head. Think of it as navigating unknown territory with a makeshift map, unpredictable and risky. Starting small, doing your research, and easing into trading with a limited amount is a smart move until you get the hang of it. Building knowledge and experience is the key to keeping afloat in the unpredictable world of crypto day trading. 6. Chasing hype projects. Jumping on the bandwagon without careful consideration can lead to financial pitfalls, especially in the realm of cryptocurrency. Just because a project is making waves in the news or social media doesn't automatically translate to long-term success. It's crucial to navigate the crypto space with a discerning eye. Be cautious of pump and dump schemes, where prices are artificially inflated and then swiftly crashed. Instead of chasing after the latest hype, focus on projects with robust fundamentals and tangible real-world applications. A thoughtful approach to investment, grounded in understanding a project's technology, team, and practical uses, can help safeguard against the volatility inherent in the crypto market. In essence, it's about steering clear of the crowd's blind enthusiasm and making informed choices for a more resilient investment strategy. 7. Ignoring market trends. Not keeping an eye on the bigger picture in the crypto market is a big no-no. The prices of cryptocurrencies are affected by all sorts of things, like how people feel about the market, new rules from the government, and cool tech upgrades. To make smart choices, it's important to know what's going on. Think of it like sailing a boat in a rocky sea without checking if a storm is coming. You wouldn't want to do that, right? Even though it might be tempting to just hodl, that's crypto slang for holding on to your coins no matter what. Being in the know is crucial. The crypto world can be a bit crazy with tech changes, rules shifting, and economic stuff happening. If you don't pay attention, it's like steering your boat with a blindfold on. You might hit some unexpected waves. But hey, that doesn't mean you have to jump every time the market jumps. Finding the right balance between staying updated and not freaking out at every little change is the secret sauce. Imagine it like sailing smoothly, considering both short-term waves and long-term plans to avoid getting caught in a storm. Smooth sailing. As you venture into the world of crypto investing, it's essential to arm yourself with knowledge and approach the market with a level head. By avoiding these common mistakes, you'll increase your chances of navigating the crypto jungle successfully. Remember, patience and diligence are your allies in this exciting but volatile journey. Are these basic steps enough to get you to learn more about investing in cryptocurrency? If so, click the link in the description. If you like this video, please give a thumbs up, comment, like, and subscribe. Happy investing!